first question is that IPO, right?
Yeah.
A lot of people hear this term, but they don't fully even understand. Like,
what does the acronym mean itself?
Gotcha. So it's initial public offering.
A lot of times we see the valuation for a company.
Yeah.
And like, is that how the process, they get the numbers?
Well, the valuation can come from a multitude of things. The valuation, you can look at a company and think that the company's worth $30 billion. You can look at a company and think the company's worth $10 billion, right? Everybody has different metrics on what they value stuff. And again, the valuation is from without looking inside, right? This is just on the outside of your house.
It's like the appraisal.
Right? So it's appraising you. So the valuation could be correct, could not be correct.
Because I was going to say, because right now Uber is possibly, they're looking at $100 billion valuation?
Somewhere in the realm. Yeah, but they're going to come up with a high value. It might be one of the higher ones, right?
Let's say $100 billion valuation. That's what they're looking at. And they've never made a profit.
No.
So that's another thing, right? Lyft has never made a profit.
Yeah. So that part of it is like, basically once you go an IPO and you haven't made a profit, that clock starts ticking. Now you got to make a profit, right? And they'll give you some quarters to kind of get your feet wet, get stuff together, right? But eventually, now you're open to investors and public investors and other institutions and hedge funds who all have different motives. You might be a long-term investor. He might be a hedge fund looking to make a quick buck or make a power play, right? And that kind of gets into the market. If you guys want to think about it, it's like the ocean, right? You got sharks and you have fish and you have whales and you have eels and you have seals and you have all these different creatures. They all have different purposes, right? The octopus, and they all just want to live their life in the ocean. They want what they want, right? The eel's not worried about what the shark's doing. The shark's not worried about what the koi fish is doing. They're all just living in the same atmosphere, but they have different purposes. And that's the stock market when you start to get into the exchange and all these different investors, right? That's a deeper dive. Yeah. When you get into this IPO market, the company is doing it because they feel like with the extra cash, they'll be able to take their company to the next level. The same way that you might take a home equity loan out because you feel like you can take your house to the next level and it'll raise the valuation of your house by adding the bathroom or adding the kitchen or adding something to your home, right? And eventually you're going to pay that money back because that's debt, right? They're offering equity. That's debt. They owe somebody money. They're using other people's money to take themselves to the next level, the same way as people, we take loans and credit cards to take ourselves to the next level. Is what companies do, right? We're the CEOs of our own companies every day, right? So your balance sheet of what you do on a daily basis, you're the CEO. Rashad is the CEO of Rashad Co. So the decisions you make on a daily basis, the same way a CEO makes decisions for his company. So you start to look at it like that, it all kind of connects together. You know, you're like, okay, I understand why they would do this now because he's moving in the best interest, the same way that you would do that, right? Like,
so then also, all right, but so Snapchat, right? Can we talk? They still haven't made a profit,
okay,
and they said that they might never make a profit, right?
Okay, yep.
So these companies come into the stock market like Uber and Lyft, they never made a profit, but from my perspective, in the easiest way to explain, people will still give them the benefit of the doubt because they believe in the business model and they think one day they will turn a profit, right? But sometimes they don't turn a profit, like Snapchat. Yeah. So now what?
It comes down to potential, right? At some point in time, you get too old to have potential. Right?
It's like basketball.
No, it's like life, right? Like, if I don't get it right at 17 years old, it's like, well, you have your whole life ahead of you. And then I don't get it right at 24, well, you're still young. I don't get it right at 26. Hey, you're kind of on your last legs. I don't get it right at 35. Like, fam, you just didn't figure it out.
That's what Fox said, right? He was like, yo, if a dude don't make it by 35.
Like, at a certain point in time, it's the potential's gone, right? I can't use that as an excuse as to why I'm not accomplishing something. And so, like I said, all these things in the stock market and all these things in life kind of tie in together. So, yeah, on potential, I'm going to invest in this company because it can be fruitful if I was investing. That's what the person's thinking, right? They're saying, okay, I get the premise. I understand the business concept. I understand how they make money, how they plan to make money, what they're going to do. First part. Second part is, are they going to execute, right? We understand now, but do I believe in the execution? And then if they don't execute, what's my next move? Because nobody ever plans to fail. Like, people always plan for everything to go right. And that's not how life works, right? Mm-hmm. When I was a kid, okay, I'm going to get my degree at 22. I'll be married at 25. I'm going to make 6 figures at 26. I'm going to have a kid at 30. Like, That never happens. Like life punches you in the mouth, and everybody's journey is different. So that's why I said this stuff is all kind of like life based, because at the end of the day, these journeys these companies are on are independent of their own. Like the CEO's job is to do a certain job with the company and raise capital or to take the shares to a certain price. And Adidas and Nike, though they are competitors, they might have different operating procedures or different goals of what they want to do. And that comes down to like looking actually in the company at what they're doing well, what they're not doing well, and how their success or failure basically affects the ecosystem with which they live in, which is the stock market. For example, Foot Locker derives a lot of their success from Nike, right? Nike's the biggest shoe retailer in terms of sneakers. 2017, Nike had a very bad fashion year. They didn't hit on a lot of different things, right? So they had a down year. That took Foot Locker stock from like $70 to $30. It dropped like 65% because they're tied to that. And then on top of Nike not having a good year and then affecting Foot Locker, Nike said, we're now going to directly distribute shoes from Amazon. So the market said, oh, you guys are definitely in trouble now.
Yeah. Right?
And now you look at Foot Locker and they've kind of built themselves back. And Nike had a better year. The 270s hit, and the whole they have a bunch of different shoe lines and clothing lines that hit that did well. Yeah. And that ecosystem, right, they're doing well affected Foot Locker. So the same way I said, it's like an ocean, right? The ecosystem and how we do things affects everybody. It's important to understand Nike because I'm going to understand Adidas. It's going to help me understand Under Armour. It's going to help me understand Foot Locker. It's going to help me understand Skechers. And help me understand all these other companies that are in the same ecosystem on a daily basis. And that will now affect what I want to invest in, if that's what I want to invest in.
So would you recommend like specialty? All right, like so if I wanted to get started in the stock market, right, should I just focus my energy and say, okay, I'm already interested in tech. Let me just focus on tech so that I can learn everything about tech that I need to know, Google, Amazon, Facebook, all of these companies. Or focus my energy on fashion, because then it's like, okay, once I master that, like you said, now one tech company is kind of related to the next tech company, and I'll be able to read those publications. I'll kind of have my niche. Or would you just recommend like broad range, learn as much things as possible?
Like I said before, I'm a big proponent of read what you're interested in. That's the best way because you're going to get excited to read. Like, I don't think people get excited to read. Like, you're not excited to read certain stuff. True. Like, we don't even read the Apple contracts when they pops up and it's like, you don't know what you're saying yes to. They're like saying, yo, we're going to take information, we're going to sell it here. And you're like, okay, whatever.
Agree.
Right? No one likes to read. Yeah. So the biggest thing is to do the things that you don't like to do, you're not comfortable. That's when you know you're growing. Like, if I'm doing stuff and I'm not comfortable doing it because I don't have a comfortability because I don't do it all the time, I need to do it because I'm growing. I don't need to keep on doing the same things that I'm comfortable with, right? But the comfortability is in the interest.
Yeah, just from a teaching standpoint, that comes with endurance. Like, reading endurance is a thing, right? Like, the first time you read an article, maybe you do it for 5 minutes. Then the next time you do it for 10 minutes. And then by a month or 6 months, now you're reading for an hour, right? You got to build that thing up. You got to train yourself to do it.
All right. So now we gave you some background on it. So now we're going to go into the next level of how you guys can actually get your foot in the game and start to make some money, because it's one thing to learn about it, but it's another thing to actually profit from it. All right, guys. So now we gave you some background info on the stock market, how stocks work. But now, it's one thing, as I said before, to provide information. It's another thing to actually use the information. So now we want to, give you some tools that you can use yourself as far as, to get your feet wet in investing. So, all right. We talked about platforms, right? Yep. So there's a lot of different platforms how somebody can invest, right? One of the apps is Robinhood, right? What's your favorite? Like,
So it depends, right? Like, do you bank with Chase, and then you can do it through JP Morgan Chase if you wanted to do it, right? Do you bank through Bank of America? You do Merrill Lynch. If you bank through Wells Fargo, you do Wells Fargo. So there's platforms there. Like I said, there's Scottrade, there's E-Trade, there's TD, there's Robinhood, there's Acorn. There are a gluttony of places.
Can you just explain Acorn? Because somebody asked about Acorn. Acorn has a unique platform.
So Acorn is the company, if I'm not misinformed, is a company that I think Ashton Kutcher is a part of, where they take the change when you use it and they buy shares with your change. and it's a way to get exposure to the market.
Yeah.
Right. So like the game that we're playing is all about exposure. You don't know what you don't know, right? So then reading, exposure, these sites, exposure. Now you're exposed to all these sites we're mentioning. Go on there, read their platform, read the offers, call them. They have customer service people, ask questions. Say, hey, if I choose you as opposed to them, what benefit do I have? Yeah. Right? That's the thing. We're in a bubble right now, and the idea is to get out that bubble. Mm-hmm. And so what we want to preach is, there are a lot of platforms, and now the onus is on the person to do due diligence. I don't know what works best for you because I don't know your financial circumstances. Yeah. I don't know where you bank. I don't know what you're comfortable with. There are companies that have customer service reps you can call before you make a trade that will help walk you through stuff. They'll help find research with you. They have platforms. It's extensive stuff. It's very labor intensive, right? All this stuff is labor intensive. Mm-hmm. So now it comes down to how passionate are you about things.
Yeah. So read the fine print.